Yeah.
Boom.
We're live.
Dude, Kanye's meme coin. Oh
I know.
my God.
I'm rocking 𝘗𝘳𝘠𝗦𝘠444 vintage tee to celebrate.
I was up last night in bed at like 10 p.m., 11 p.m., which is pretty late for me. And I was just cranking through Kanye, just in bed with my big headphones, cranking Kanye.
The old Kanye slaps.
Oh yeah, I was listening to like yeah, not like the old stuff, but
Yeah.
But so I put out this thread like breaking Kanye West launches meme coin Yeezy. Thread did well, and basically what happened in the initial period is they let it launch for what looks like half of a day, and then basically he tweeted the CA with in a screenshot as if it was an iMessage. It says a new economy built on chain, whatever that means. And it pumped from 200 mil market cap to 2 bill in like 5 minutes. 1, 2, 3, 4, 5, 6 minutes. Pumped to 10x. And then I started watching it because I was like, holy shit. And then it hit 2.4 or 2.14 bill, 2.8 bill,
all the way up to
3
$3
bill.
billion.
And then I came to realize that half of the market cap was, or 70% of the market cap was in one wallet. 87% was controlled by those like what they call a bundle. And then, I just summed it up. And so I bought like $1,000 worth just because I wanted to just F around and find out. And I got my butthole blown out. So that's where we're at.
Congrats. But you had fun doing it. Enjoy, GG.
I mean, it was
well
all right.
played.
What do you think about this? I saw some. I mean, there were so many tweets. We could go through the timeline for hours.
I mean, there was
rolling through the tweets.
There was a video from Altcoin Gordon. Evidently, there's a guy on Instagram. His name is Mikey Shelton. No profile picture, and he runs an insider community, and he helped launch this token. And so the caption is, so the guy who is behind Yeezy token is publicly bragging about insider trading and rugging for millions of dollars on his IG.
Yeah, that's crazy. Dude, I mean, I haven't done that much like actual digging into what happened or like people's takes, but it kind of just seemed like the market kind of just brushed this off. Like the market was kind of just like,
it's about 12 hours ago. So it's still pretty recent.
Yeah, no, but I'm just saying, like when Trump launched, it was like, holy shit, Trump launched. This is crazy. This thing went straight to 80 bill. And then this thing just kind of like, I don't know, maybe I saw one tweet that was saying like that this is just the lack of speculative fervor in the market. So I'm not sure. I don't think it's like, and the market's down today a bit, I think, as a result. I think it's because of the launch, to be honest. It's just like, what the hell? I don't know. So
I mean, to put Kanye on the same pedestal as like the president of the United States, I think is blowing it out of the water a bit.
Really?
When the president launches a coin, I think that holds a lot more weight than Kanye, who has really damaged his reputation and his brand over the last few years. And I think has lost. I mean, when you say some of the things that Kanye said, how can you take anything he says seriously? And so.
Yeah. I mean, yeah.
And then you look at the tokenomics and you see that 87% is controlled by this one bundle. It's tough to really take it seriously and think that there's going to be any kind of sustainable.
So check out these numbers. 56,000 wallets touched the token. This is a good one here. 56,000 wallets touched the token. 15,000 lost up to $500. 1,200 lost up to $1,000. 2,000 lost up to $5,000, and all the way down to $1 million. One person lost $1 million. Meanwhile, only 5 wallets made $1 million. So it looks like about, I mean, pretty much like 20,000 users or wallets lost between $500 and $1 million.
What do you make of this?
60% of traders are at a loss. I mean, dude, I don't know. I mean, I am one of those traders, but that is, I literally bought Pump Fun on the day it launched on my Phantom wall with 2K. and then I was down to 1K. And so I was just like, all right, well, we're going to throw this into Yeezy coin.
Oh, I see. All right. That's the old Phantom mobile wallet. That's exactly what that's for.
Yeah. All right, guys.
The best way to degen around is Phantom on mobile.
That's easy. We got Josh here in the back. He's getting set up. I just want to maybe, Rob, you wanted to run through something with prediction markets. It's definitely the meta right now. What did you have here for us?
I just think that there's a lot of very interesting platforms. Polymarket and 𝘗𝘯 are, of course, the two leaders in the market right now. Polymarket has a more global audience, still restricted in the US. 𝘗𝘯 took a lot more of a regulated route. They've got CFTC saying that they're cleared for US traders. Part of this meta is also that FanDuel just launched their prediction markets offering. 𝘗𝘯's biggest category right now is sports. And so we're seeing the convergence between sports, gambling, prediction markets, and financialization, stock market, et cetera. Also part of this meta is that there's a lot more prediction markets popping up. Previously, I think it was extremely difficult to break into this market because it took so much distribution in order to overcome the liquidity volume dilemma. In order to bootstrap both sides of the market, you needed some level of efficient pricing, but you needed liquidity to get that.
Yep.
Really, Polymarket was the only, they started off as an AMM and then switched to an order book once they got some significant liquidity. But an order book is the way to do this, but you need liquidity to do that. And so that catch-22 caused this really high barrier to entry. I think now we're seeing product market fit and traction on Polymarket and 𝘗𝘯, and that's creating this effect where you can start to put wrappers and start to create new front ends and new distribution channels for those two pools of liquidity. Almost like we heard from Luke the other day about Hyperliquid, how it's becoming this liquidity operating system that can serve perpetuals in Phantom. It can serve perpetuals in EtherFi. All of these are becoming distribution channels for Hyperliquid's liquidity and their perpetuals market. I think we're going to start to see something similar in the prediction market where they start to serve other distribution channels and it creates this more robust ecosystem around these two platforms.
Yeah. So like using the back end of Polymarket or like the liquidity and the infra of 𝘗𝘯 and then running like the Rollup prediction market with our own front end and like our own means of distributing it, but just using their technology underneath and then doing that at scale with like FanDuel.
I think prediction markets and social media have a really strong connection. Prediction markets are effectively news and social media is effectively news. And if you can combine these two and you can have a more empirical fact checking or objective source of truth because people are putting their money where their mouth is, you could really clean up a lot of the social media timelines. So I think there's a strong convergence there. Also, I don't know the exact specifics of FanDuel's prediction market launch, but if I'm FanDuel, I'm either going to tap one of these liquidity, like a 𝘗𝘯 or a Polymarket for the infrastructure, for the oracle and the resolution of these markets, or I'm going to tap them. If FanDuel has their own capital, they have their own liquidity. They don't really need to tap into the liquidity aspect. They could benefit from the infrastructure. If I'm one of these other smaller books or smaller exchanges, then I'm tapping into Polymarket, I'm tapping into 𝘗𝘯 because they have the liquidity to serve these markets.
Yep. Very cool. All right, guys, we've got a sick lineup today. We've got Josh from Iris joining us up here next. We've got Fish from Token Mill following him. Then we've got Dima from Subsquids, SQD, we've got Altcoin Sherpa, and we've got Ian from Ledger. I think I might have reversed those orders around. But yeah, guys, it should be a fun stream. And yeah, I think we're gonna get Josh up here next, and let's get fired up. Let's get him into the back end. And Iris has just raised, I believe, their Series A, Rob.
Yeah.
So
10 mil.
that's pretty sick.
They raised $10 million. We're going to hear from Josh about what exactly that money is meant to do, how it's going to help scale their data product. I think we've got Josh in the back end now. So we're going to bring him up here in just a moment. There he is. Josh, welcome to the show and congrats on the raise, buddy.
Josh, woo, you got some confetti, brother.
Oh, yeah. Money rain for Josh, too.
Dang. You're $10 million richer. The way this works is that goes right into your personal pocket, right? The way that this works is that just goes right into your personal bank account and you're just $10 million richer, right? That's how this all works here. Bang.
Dude, you are going to get me in serious trouble.
Congratulations, Josh.
Instantly regret coming here. I'm just kidding. It's been a long time coming, and actually, like, raising in this market is not the easiest. This is the 4th fundraise I've ever done in my life.
Okay.
And for Iris. And yeah, it's probably it's definitely like one of the more challenging markets, but the fact that we've been able to raise more than we have before shows that we're doing something right.
Yeah.
So I'm happy.
Okay, so Iris raised Series A, $10 million, led by Coin Fund, bringing your total funding to $20 million. You also had participants from Hypersphere, Tyke Ventures, Varick VC, Echo, Breed, and Wagme VC. Talk to us about the vision for Iris that you pitched these investors, the vision that you see that you wanted to raise more capital for. You know, what is the Iris pitch to the investors? How did you guys get this over the line? You know, talk to us about the process, about the pitch, about the experience.
Yeah, there's a lot there. So so when we talk about Iris to investors and also to the world, is that our focus is about how do we use crypto rails, in this case building this L1, to make the, I guess, data infrastructure part of the stack more efficient. And what that really means is that the way that you store, you compute, you utilize data should become more cost efficient and more expressive as well. You'll be able to do more useful things. And this becomes more important, and this was kind of more of the conversation I had with CoinFund especially, is that this becomes very important in the world of AI. Because if you look at, you know, when ChatGPT launched, I guess now 3 years ago, losing track of time, long time, data became this very valuable asset. Really, there were 3 things that are valuable: is compute, data, and the algorithms, or the engineers kind of building the algorithms. And we are very focused on that data part of the stack. And CoinFund's thesis is that crypto will make AI as a space better. And the bet on Iris is that we will make the data part of the AI stack more better and more valuable. And they've also made kind of similar investments which tie into that thesis more on the decentralized training.
And they're also very bullish on WorldCoin.
Oh, super bullish on WorldCoin. If you look at the team's Twitters or X accounts, they are all, like, every day bull posting, 100,000 people onboarded to WorldCoin, and there's no one more bullish.
So was the raise substantially more difficult than you had previously thought? Like, I mean, you guys have an established brand, clear product roadmap, and growth testnets already live. Like, I imagine you just kind of walked outside, told people that you were raising again, you know, looking to go mainnet soon, and you would have picked up some checks and called it a day, but it doesn't sound that way.
Well, we definitely, on a relative basis, like, raising wasn't like the most difficult thing ever. I'm more just talking about how, as a founder, I think, and if you speak to any founder that raises any amount of money, that the VC market is kind of like down only right now in terms of the capital allocation. And you definitely feel that there's, you know, the amount of DD that investors do, the amount of time they spend with founders is honestly 10 times higher than, let's say, when we first raised in 2021 and 2022. obviously during that crazy market, it's 1,000 times harder. And actually, I'd say VCs are even more conservative than they were in 2023, because we raised one around kind of in the middle of 2023, and that was at the bottom of the bear market when everyone just wanted to die. And even then there was like a degree of optimism, whereas now within venture, I'd say there's almost no optimism from most venture investors. Now, yes, we were able to raise, and we had a ton of interest. That's why we were able to raise this round. But also I'm making more of a comment for my also fellow founders who are also struggling as well from other companies who have been trying to raise capital, especially for earlier stage companies than we're at.
Yeah, absolutely. I think as you describe it, I mean, would you have any advice, for a company that's maybe in a little bit earlier of a stage than you are? Well, when you go into these meetings with VCs, what is it that they're looking for? What kind of advice can you give to builders that are looking to raise maybe a seed or a Series A?
Yeah, so the most challenging thing, but I think this is the hack, is that investors want to hear what they want to hear. And what I mean by that is that when they pitch to the LPs, they have a thesis. And so when you think about, let's say A16Z, that's the best one, because it has a whole book on this, which is read, write, own. And if you look at something like Story Protocol, the reason why I was able to raise that capital is that it really plugs into that mental model that Chris Dixon has around read, write, own for the internet, and in that case for IP, for content. And that's kind of an example of, if you understand what investors are looking for, and it's mostly around what they're pitching their LPs as well. That's actually the really short hack to raising capital. I could give you all of the very basic things, like have a product that is kind of functional, have a good background, tell a good story. These things are all the very, very basic things. But also you've got to look at it when you're speaking to certain investors. The story that you are telling needs to be almost different with every investor to some degree, because every investor comes from a different angle, a different thesis. So that's probably the number one thing.
Yeah, man. Yeah, man. Very, very cool. So Josh, what are you going to spend $10 million on? I know you're a big party guy, so I assume we'll get some clubs and some tables, maybe some business class flights for you and the ladies. But outside of your egregious personal spend at the pub, how do you plan to spend the $10 million?
Dude, you are going to get me in so much trouble. I'm definitely going to get a message after this being like, is this true? Yeah. And I'm going to be like, yeah.
This is not, yes, it's all true. This is not financial nor life advice. Things I say may or may not be joking.
Yeah. So I won't be spending any money on parties, sadly, and definitely the pub. Fun fact, yes. I am a British person, but I hate pubs. I am the biggest hater of pubs, so I'm never going to spend any money at a pub. But the majority of the money will be focused on, I guess, two things, right? One is generally like scaling the team, but more specifically, I'd say engineering is an important place where we're going to scale, and not so much on the protocol side, but more on the, I guess, tooling and kind of side infrastructure side, kind of things. And what I mean by that is we need to build better developer tooling to have better UX and better adoption from developers. So I think that's one of our big focuses, is to invest some time and money into that. And then the other side is more on the actually like direct growth and ecosystem side, where we're going to be making a big push, a little bit more within Web3, but really our big focus is going to be around getting institutional adoption, and getting some of these Web 2 companies, preferably also some of these Web 2 AI companies as well, using apps on Iris and also using Iris directly. So that's where a majority of the capital will go. There's not going to be any money spent on business class flights with, I don't know, female friends or pubs or anything that Andy just said.
Good, man. Good.
Josh, it may be helpful for anyone who is unfamiliar to explain what is Iris. These apps that are building on top of Iris, what are they doing?
Yeah, that's a good question. So Iris is an L1, but we're very different to, let's say, I don't know, let's use the extreme, like a DeFi parachain or Ethereum or Solana. We are a data chain, so we're focused purely on how do we store large amounts of data on the chain. So there are really like two parts to the chain. One is that there's this decentralized storage network that allows you to store data for any period of time at a much, much lower cost. And then there's the VM, which allows you to deploy actually whole on-chain applications on the chain that allow you to interact with the data. So, and that's the best way to actually look at Iris when it comes to the use cases, that we have some people that simply just are using Iris as a way to store and retrieve information. So every time you use an application and it loads some data and it uses Iris, it's loading it from Iris's network, and vice versa. When you store data, it's storing it on the network. And then on the other side, there are some applications that are actually doing both, where they are storing data and they're also interacting with the VM. So one example is we have 𝘵𝘂𝘍, which is a data marketplace that allows you to buy and sell AI data sets for training, essentially. So they work with a bunch of Web2 companies. They actually, their application uses Iris to, one, store these very large data sets for a very kind of low cost, and also be able to kind of share that with anyone who wants to buy it. And then also uses Iris VM as the way to essentially tokenize the IP associated with the data. So when you buy a data set, they post a transaction to Iris VM, and it essentially mints the IP on the chain. So those are kind of the high level ways that people utilize Iris today.
And Josh, when you're looking to build out the ecosystem to go to mainnet, what are the ecosystem projects that you guys are incubating or that are being built on Iris that are exciting? I know you just mentioned one here with regards to AI training data sets. And when is mainnet coming? When do we get the launch of L1? What's the timeline for that?
When token. Classic. Andy knows how to say when token in a very very smart way. So mainnet is coming very soon. I obviously won't give you a specific date or timeline, but it's around the corner. Okay. I'll put it that way.
Like the corner in like Q4 or like Q3?
I'll put it this way.
Bad question.
The issue is this is dangerous. This is a dangerous question.
It's all good.
If it does go into Q4, it will be very, very, very early in Q4.
All right.
The latest. So I don't think we're not.
And tell us about
Q4,
the ecosystem. What's the ecosystem look like going into mainnet? What kind of apps will be live? Which are looking the most promising, etc.
Yeah, so the one application that we've incubated has actually been 𝘵𝘂𝘍, and so that's been our big focus. And the reason is that is one of the applications that it has actually has institutional Web2 adoption today already, and we knew that this problem of providing high quality data sets for training is a real problem in the AI space. So that's been our major focus with getting Web2 companies onboarded onto Iris via this application, and that's run by a really smart founder called Freeman. And beyond that, we have a lot of like smaller applications. We have a custom kind of like email client, for example, that uses Iris as the like cheap way to send and receive emails. But yeah, so our major focus has been around how do we get a lot of applications that are just storing and retrieving large amounts of data. And then we've been focused on applications like 𝘵𝘂𝘍, where where they will actually bring institutional adoption as well. So those have been really the two big focuses from the ecosystem. And we have about we have over 50 people in the ecosystem now, but a majority of those mostly just using Iris to store data. So that's been that's where a majority of the use cases lie.
Got it. Cool. So you must be pretty busy, man.
Yeah, I am the busiest I've ever been in my life. Yeah, launching a network, launching a token is the most painful thing ever. Especially for me, because I am a control freak and I like to get involved with everything in the company. So I'm just doing everything all the time. But I do love it, but it is definitely a stressful time.
So, dude, something happened with like some NFTs on Iris or something. You guys had some like community or like some organic NFT collection that like tried to get endorsed by you guys, and then like you didn't endorse it. You're like coming into this role of like the arbitrator of what's what in the community. What's that process been like for you to kind of like step into some of these community situations and kind of put your foot down and kind of say what's what? You know, how has that been? What's the more organic NFT kind of like fun side of Iris that I think a lot of us, you know, in this sphere are probably more in tune with than some of the bigger Web 2 AI things that you guys are doing? What's been going on there?
Yeah, I mean, you raise a good point. Having a community is very interesting. Like going from having, you know, a small community to a very big community is interesting, because there's a lot of positives and there's also a lot of negatives, and it's very much a learning experience, because as you said, there was someone who minted an unofficial NFT using our name, and we had to like do some communication around that, and it was very I guess irritating situation, to put it nicely. But yeah, so the way that a lot of the community has been interacting with Iris now is we have a lot of like mini apps. So outside of the core, as at 50+ applications, we have actually maybe 15 to 20 like mini apps on Iris, and we have this all hosted within our portal. So if you go to portal.iris.xyz, you'll see a lot of them. And they've essentially been playing around with a lot of these applications, has been like the major thing. And we've also done some other campaigns. We did a campaign with OKX Wallet, with essentially an NFT giveaway. So we have an NFT whitelist, and we gave some of those away for this NFT campaign. And we had about, I think it was 1.1 million participants in the end, or maybe 1.2 million participants. And it was fairly like Sybil resistant as well. So that was a very successful campaign that we did with OKX Wallet. And then we'll be doing some other things as well in the near future. We also do some offline events. So I've spent a lot of time. I'm in Korea now. We've done an offline event in Korea. We'll likely be doing some offline events in China as the goal. So yeah, we've been doing a ton of different community initiatives, both online and offline. A lot of them within Asia as well, but we also want to expand to other parts of the world. But sadly, I can only be in so many places at one time. So, and traveling is, to be honest, traveling sucks. So I'm trying to like also minimize the amount of time that I travel. But yeah, we have a very vibrant community, and I actually really enjoy doing stuff with the community. It's actually like it's a place that I want to be, which I think is actually one of the best kind of metrics for the success of the community.
Good point. Good point. No, I saw the NFT thing and I thought that was really funny. Yeah.
You might have thought it funny. I
didn't. Dude, have you thought about the Iris token with regards to this entire meta, if you will, of like buybacks back to, you know, giving yield back to holders, real value creation, not just governance token? Like, are you guys gonna do something unique and new and fresh, or same POS L1 model? Like, how do you guys differentiate? And like, how has this regulatory environment, which has changed and gotten much more positive in the US, which really affects a lot of the world, how has that changed your mindset towards the token as a founder?
Yeah, so the short answer is actually the regulatory framework hasn't changed much, other than I feel more comfortable doing like token sales and things like that. But the reason I say that is because the network has already actually been designed with a kind of equivalent to buyback. So we have a heavy burn mechanism. Although actually the conversation of like burn versus buyback, like which is better, it's an interesting conversation. But yeah, so the current mechanism in the network is when you store data, 95% of the fee is burned. So the circulating supply is essentially reduced. There's a heavy deflationary pressure from fees, which will reduce the circulating supply. So, and that was actually the case even when we started, designing this, a year and a half ago. So I think we were doing that before the meta. Sorry, I'm trying to like flex it. That's not my goal. It was more due to the way that data chains are built. They need to be sustainable, and by burning tons of tokens is the easiest way to make it more sustainable. So yeah, so that's kind of the way that the Iris's network works. We did weigh up, actually. This is actually an interesting thing, weighing up whether we make a stable coin a gas token on the network, to pay for storage, because then we can do buyback models. And my biggest criticism of the Hyperliquid model is that I don't think you should do buybacks every day. I think you should do strategic buybacks. Like I think everyone would prefer a buyback where it occurs during a bear market. Like you want the floor, like, okay, this is a bad way to put it. You want the floor for a token to be as high as possible. I think is the thing you want to optimize for. So we also have been playing around with some ideas around, if you support stablecoin fees and you have a big treasury of stablecoins, how can you compliantly use that to buy back tokens at strategic points? So those are some of the ideas that we've been playing around, and you wouldn't have been able to do that definitely 2 years ago from a regulatory standpoint.
There's so many creative models. First thing, of course, is getting some people to pay for the chain, whether that's revenue from these apps or it's these apps paying in gas. There's also models, right, where rather than making the stablecoin the gas token directly, you continue to have your native token, but then you kind of have this paymaster model where someone can swap into the gas token, which is effectively buying back the gas token and then using it to spend on the network.
Yeah, as long as you have sufficient liquidity, which I think you would. Yeah, as long as you have sufficient liquidity, that would work.
Do you have sufficient liquidity?
So I guess that was the
next question.
That's basically. Well, it depends on fees, right? If we did $1 billion,
Josh, what's the listing process like these days? These are some, early conversations for this. You just announced a raise, mainnet, one day, Q3, Q4, but these are maybe conversations you're starting to have. What is the listing process when it comes to launching a token?
Listing a token? I mean, there's not a lot that I could say.
Fair enough.
But what I will say, I mean, it's actually like very, like, I can only really say 1%. I'll be very honest, just because it's a sensitive process. But what I will say is that when it comes to launching a token, you want to be listed on as many avenues as possible, and centralized exchanges still are the kings of liquidity. So our focus will be getting on centralized exchanges and getting on as many as possible. I think Luca was saying this with Pengu, is that, and he's absolutely right, that you want to have as many people being able to participate in the thing that you built, and the best way to do that is to get listed on as many exchanges as possible. As it goes for the process, yeah, I don't know if there's much that I can that I can disclose. Everything's also my NDAs, so it's a pretty
cool.
Yeah.
Understood.
Josh, man, one last congratulations, man, for the raise and for your $10 million Series A. And cheers, man. Thanks for joining us, and best of luck as you road to mainnet. I know it's going to be crazy, so let us know when you guys are getting close, and we'll have you on for mainnet.
Awesome. I appreciate it. I really appreciate it, guys.
Congrats
Thank
again,
you.
Good, Josh.
Cheers.
Congrats, man.
Later. Alrighty, boys and girls. A lot of wait, what's that, Rob?
I wanted to get the centralized exchange question in there because for some reason there's pumps across the board on centralized exchange.
Dude,
tokens.
OKB coin has gone ridiculous the last week.
And now 𝘭𝘭𝘵 token is up a ton.
Well, maybe because Binance broke all-time highs, BNB did, so people are kind of gassed up about that.
Could be.
Not exactly sure.
Yeah.
But
Well,
that is Iris, guys. That is a $10 million Series A for Iris. Pretty sick. Guys are doing good work. I like Josh. He's got quite a personality. For a Brit, you can always count on them. Up next, we've got, I think he's still in the back, so he's probably watching that one. Up next, we've got Fish. They just launched Token Mill. It should be pretty interesting. Basically, a new way to launch tokens, a new launch pad, if you will. So stoking on that. It should be interesting to see kind of what happens there. I think the launchpad wars are definitely on. Just a matter of kind of what's going on. What are the differences, and like, are small like mechanical differences, is that going to make an impact on the effect of these token launchpads? So that's where we're at there. Rob, we'll get him up in a sec, but yeah, any thoughts on the Iris segment there?
I think Josh is a funny guy. You were clowning him a bit. I think we're gonna quote tweet their raise announcement We'll see if Josh and Josh a little bit was enough. If they're going to boost that. I don't know. He doesn't spend much time in the pub, which I think is working in his favor. We were talking a little bit behind the scenes, and he said that his strategy in Korea might be to get some K-pop stars. We'll see if that works out for him. What is I am still on the fence about KBW. I know you're headed out there. What are you expecting? You excited? How do you think it's going to go out there in Korea?
I think it's going to be an absolute DGen show.
Really?
Just pure madness. Just market's going to be ripping, I think. And maybe actually, I don't know, in September, who knows what the market's going to be. But I think people are going to be I think it's going to be just madness. It's like Korea mania right now. It feels like, it feels like everybody just wants to get exposure to Korea from a marketing perspective. And, you know, I'm not sure that's really going to change. So yeah, I expect it to be pretty fun. And then Singapore token is right after. So I think that's going to be way more chill and relaxed. Singapore as a city is just super chill. Such a sick city though, like, but super chill. Just like hot and like really futuristic. But Seoul has like this character to it. It's got like a vibe, I think. I mean, I was only there for one day in the past. But yeah, I think it's going to just be a kind of a big party. I mean, that's kind of how I expect it to go down, if I'm being honest.
Yeah. I think from a media perspective, there's a ton of opportunity. We've gotten connected to some Korean media outlets. So I think that'll serve a lot of the teams that we work with pretty well, both on the Good Idea Ventures Portco side, as well as on the Rollup Co side. Generally, I think, you know, our audience being mostly Western, we create this chasm. Literally, these two hemispheres are separated by an ocean. And so I think building some connections over there is going to end up helping a lot of the teams over here, vice versa. So there's probably some deal flow over there. But it's just funny because crypto is just such a global market that it's only a matter of time before these things get more interconnected. So it's pretty cool. There's some conferences a little bit later in the year that I'm pretty excited about on the Western Hemisphere. Base Camp in September, SmartCon in November, obviously Token in Singapore, Korean KBW next month. So there's still a ton going on. And then obviously we wrap up the conference circuit in BA, Buenos Aires, towards the end of November.
Yeah, that's going to be something else, that's for sure.
Yeah, I think so too. I think with Ethereum and their mindset shift, Ethereum World Fair is something that they're starting to put together. It sounds pretty exciting.
Is that what's happening in BA? There's a World Fair?
There's a World Fair, the Ethereum World Fair.
Okay.
Don't really know what's going to be what's going to go into that, but sounds cool.
Yeah. Interesting. Cool. All right, I think Fish is going to jump in. He's just getting finalized set up. We're going to talk about Token Mill. Basically, guys, TLDR on this is I was just having a look at Fish's Twitter and Trader Joe's Twitter and kind of what Token Mill has done. So they've gone from Trader Joe to LFG Joe. Token Mill, the meme coin game was missing a real flywheel, one designed to give the trenches what they crave. Explosive pumps on repeat. All right. Okay. Token Mill, the launch pad that turns trading fees into massive pumps. Here's how it works. Every 30 minutes, there are 3 new kings are crowned: bronze, silver, gold. 5 minutes before crowning, the king of the mountain race begins. Top 10 tokens fight it out on a live leaderboard. Only race volume counts. And you got to become a king. You need top 10 by market cap in your tier, highest 5-minute race volume. And the mill takes every fee from the last round, slams it into a giant TWAP, buy plus burn of the kings, of the winners, injecting hype, visibility, and volatility. So yeah, this is gonna be an interesting one. But it's so that's where we're at with Token Mill. So I think Fish is maybe having a bit of trouble, but I think we got him. So yeah, we'll keep this one relatively short as we're kind of getting behind here, but yeah, this is going to be interesting.
I think this
wanted to cover this because it just came out, and yeah.
I think this is the nature of getting more guests, getting more streams, and being a little bit more nimble and on the fly, which is pretty exciting. Josh wasn't originally scheduled. We wanted to get him on because he just announced the race. He's out in Korea. It's like middle of the night over there. So appreciate him.
Yeah, it's
making
got to
that
be
work.
like 1 a.m. over there or something.
Yeah, but that's all good. Pretty cool that we're able to just spin this up. We've got our team working behind the scenes.
What's your take on the? Do you have any take on the Bonk versus Pump Fun situation? Like Bonk had a big run up in dominance of volume. Now Pump Fun is way overtaking it significantly again. Bonk's such a small amount. Pump Fun tokens obviously down, but still trading high. They're doing buybacks. Like, I mean, as we get fish in here, like, what's your thoughts on like this whole launchpad meta?
I'm pretty skeptical. Like, it's tough to argue with Pump Fun generating billions of dollars in revenue. So that's pretty cool. But when it comes to the launchpads overall, I think I need to be convinced on why this is sustainable. We've got Fish in the back now, so
Fish
we're
going to try to convince you here today. Then.
I'd love to.
Why Fish, this is sustainable?
Let's get Fish up.
It's been a very stressful an hour and 40 minutes.
Yeah, man. Our apologies for some of the technical stuff on the back end, but we got you in. You're in.
Yeah.
Didn't have the link. Yada yada. Silly stuff on our end. But
no worries. I'm here now.
Dude, I was just reading off the announcement. So the meme coin game was missing a real flywheel. One designed to give the trenches what they crave. Token mill, the launchpad that turns trading fees into massive pumps. Here's how it works. I'm not going to read it all again, but maybe you can explain to us how this works, why it works, and how this is going to create a more, because Rob's question is about sustainability, right? How is this going to create more sustainable kind of culture in the trenches? But congratulations and welcome on, man.
Yeah, I think, this is born out of my own frustration at trenches. Like, I'm not a good meme coin trencher. So when I was trenching a few months ago, I was one of those guys that randomly had like random filters on Axiom Pulse and just tried all different kinds of presets, right? And I kind of realized that, especially on like, these terminals, you have so many tools and it gives you the illusion that you're equipped to win, but it's actually just, it's as good as like throwing darts at randomly at a dartboard. So I felt like we just needed a better heuristic on how to gain an edge in this game, right? So I felt like, with King of the Mill, it was more egalitarian. So the idea is like these coins, they can be botted, they can be caballed, whatever, right? But if you pit them against each other, they have to compete for volume, right? And that kind of makes things better. So I don't think you'll ever get rid of cabals. I mean, I think cabal in general is like has a bad reputation on CT. It just means like capital formation rallying behind one coin, right? I don't think you'll ever get rid of those cabals, but the best thing to do is like make it more egalitarian where they have to pit against each other to try and win King of the Mill. So that's the whole premise behind it. Obviously like this is just like a nutshell thing. I'm hoping that the goal here is like one runner is enough to generate fees that can then trickle down into the entire ecosystem.
So you've built this kind of like King of the Mill. Is that the game? Is that the terminology?
Yeah.
And basically you have these 3 tiers for different token types in terms of what I understand to be like market caps effectively. Maybe you could just explain the flywheel for us. What is exactly the token mill flywheel? Why do you want to incentivize a trading period of a short amount of time and incentivize volume to show real commitment to a certain token or project? Maybe walk us through the flywheel and the mechanism why you chose to design it this way.
Yeah, so the flywheel works like basically you have a 30-minute window. So you get to become king every 30 minutes, right? But there's a 5-minute window before the next epoch where there's like a race window. And in order for you to become king, you have to compete with other kings in that 5-minute race window. So the win condition is 2 things, right? You have to be top 10 in market cap in that tier, and you have to win the most volume in that 5-minute window. You need both things to be true. We designed it this way. So why is there 3 tiers, right? We build dexes, we built NFT marketplaces. we've seen a tons of token launches. And the one thing that most token launches need from the first few hours of launch is volatility. That's the only thing that matters. It's not creator fees, it's not rev share, it's not any of these like community friendly features. It is volatility. Without volatility, they usually die. Like they just basically flatline, right? So we think that if you're able to get past that hurdle, then you reach escape velocity, and then that token might have a life later on. But until then, it's going to be very, very hard. So, King of the Mill is basically like, we decided to have 3 tiers. Like there's no point having King of the Mill for tokens up to 100 million market cap, right? Because we feel that after 10 million market cap, you don't need to have this boost anymore. You can live like organically as a meme, as most runners do after a certain point. King of the Mill is there to basically try and give you a boost for those smaller coins that need that kind of kick in order for them to get to that next level.
Got it. Okay, so the prioritization in your mind is like, look, if the token doesn't have any trading volume, i.e. volatility up, down, it's not attractive from an investor perspective or from a trader perspective, because it's like, look, if it's going down a lot, you're like, maybe I could buy here, or maybe I need to sell more, vice versa. If it's going up a ton, it kind of induces FOMO or people who want to sell. What you're trying to avoid is just basically sideways like boring action. And then I imagine you designed this in conjunction with like, okay, I've got like LFJ, the DEX, so I can use the volume from Token Mill to provide volume on my DEX, and then you've kind of built this larger flywheel with the other products that you're working on as a result of Token Mill kind of being like this distribution engine almost for it.
Well, the beauty of Token Mill is like it's a fully service AMM, so there's no migration involved, right? It's not like Bonk Fund you migrate to Radium, or
so it's not like it's using Trader or LFJ's liquidity.
No, everything is like fully serviced. So
there's no tie-in there?
No, it's completely independent. The bonding curves are there to host the full life cycle of the token from launch to maturity. So they could basically, like, it's an AMM basically.
And why did you choose to do that? Why didn't you try to get kind of do the Bonk Fund to Radium strategy with like Token Mill to LFJ?
I think at the end of the day, is like, as the operator of the AMM, you want to have control of the fees. It's not just for like profit and stuff, but also, King of the Mill, right? If we want to have King of the Mill for tokens at a larger market cap, it's impossible to do that with Radium, because how can I then take the fees to, use the bots? It gets very, very complicated.
Got it. Okay. Well, one of the trends coming out of Pump Fund is this, like, they're pushing their like ecosystem organic coins. They're like, look, we're gonna buy back our ecosystem coins.
Yeah.
How will you guys support your organic ecosystem tokens?
Well, okay, so this is like a big topic, right? Because everyone's bombarding me like, hey, what's the runner? What's the runner?
Yeah, like what's the runner here? Like, what is
this is the beauty of King of the Mill, right? It's like, King of the Mill is basically like, if there's something that's worthy to be supported, it will get attention, at least in the lower tiers, So I feel like it's crazy that a founder of a launchpad platform should be trying to pick the winners, right? Even though that seems to be the name of the game for every launchpad. But hey, like, if people want to get together, cabals get together and form a token. I know like everyone was asking me about Fish Wheel, be my guest, do it, right? But if you win King of the Mill, like, that's automatically support, that's visibility. Like, I shouldn't have to put my name behind it. King of the Mill does that for you,
Fish, I'm curious where the next entrant comes from, right? Like, we've kind of got our current segment of trenchers, Solana, meme coin trenches. Like, I'm curious to get your take on this most recent Yeezy launch. Probably the biggest meme coin launch since January when Trump launched his. And it just didn't seem to have the same effect, the same magnitude, right, of that one back then. Do you feel like we're going to get some sort of positive momentum of new entrants entering the space? If so, why? And if not, how can you make, a launchpad sustainable without those new entrants?
Yeah, I think there's just a lot of meme coin trenching fatigue right now.
Right.
That's mainly it, right? We've seen this play out with Trump. That's why, like, anytime a big name celebrity comes out, it's like, okay, you know what? It's a faster race to exits. I don't think people are bored of meme coins, but I think they're just bored of the same game. They need a new game. This is also the reason why we built Token Mill, right? It's a very experimental game. Like, we're struggling right now to try and get it to work. There's obviously the cold start problem we have to solve in order to get this flywheel kicking. But, the initial traction we got before we even launched just shows how hungry people are for new games. They want to try new games out. And I think, like, since the dawn of the birth of crypto, like, people are always willing to try new things out. But the current way of trenching, especially with Yeezy launching this morning, is like, we've kind of seen this play out so many times, right? Libra, with Melania and stuff. It's like, okay, let's make our money and exit as quick as possible.
Yeah, it just seemed like the market kind of almost brushed this one off. Like, it was like, okay, like, whereas if this happened last year, it would have been massive, right?
Massive,
just kind of like different era. But I think for the better. I mean, these people have just been coming in and just, like, for lack of a better term, just grifting off the space basically. And, like, we've all just kind of been buying it. And like, now these things pumping to the billions. And so last thing for you, Fish, I'm a participant, right? I am either a person who wants to launch token. I want to buy tokens. I want to participate in these games. What is the Nash equilibrium of participating in Token Mill? What is the optimal game theory strategy, maximum EV?
Yeah.
Or what are some of the strategies one could think about playing? At least just lay us out some of the like lines of thought that I could play to try to win in this game over time consistently.
Yeah, I've thought about this a lot, right? It's like, do you buy the king or do you buy who could become the king? I think the obvious play is, like, you buy the king, the TWAP comes in, you try and make a bit of money after the TWAP comes in. But I think the real game is, like, you try and predict who can become the next king. You want to get in early, try and predict who could become the next king, and then benefit from TWAP. I'm curious to see how it works. Like, that's how I would play it, but obviously I'm sure there's a lot of different ways to play it. I'm very curious to see how it evolves. Obviously, the first thing we need to solve is, like, the cold start problem, just getting volume in. Because once the flywheel kicks in, like, I'm confident that there will be a lot of games being played between people, even groups, even different kind of bots. They'll have, like, strategies. I think it could get really fun. I really believe in this product.
Fish, thanks for your time, man. And again,
thank you.
Apologies on the technical side. Sick to watch this play out and also just jump in and try it out. So, yeah, man, okay, I'm looking forward to this. Just feels like the innovation of, like, similar to, like, DeFi Summer, but in a different way, different product, different kind of idea. But like, if there's anywhere where I'm looking that's not just, like, institutional tokenization, RWAs, kind of like innovation, it's like, okay, the innovation of the best way to launch new tokens.
Yeah, this is as degen as it gets.
Yeah, exactly. Which is, but, like, if we can crack it over time, then we get to a steady state, which should be far better than what we've had in the past. So that's kind of like the beauty of it.
Yeah. All right, guys, appreciate it. Thank you very much.
All right, Fish.
Thanks,
man.
Bye.
One last little boom for the lad. All right, that is Token Mill. Pretty cool. And I wanted to get the information from him as to, like, what he thought was the best way to, kind of optimize for success in the games.
Yeah, I hear what he's saying about the meme coin fatigue. I think that's real. Like, I'm just curious what's going to change that. And he said a new game, right?
Yeah. Well, one where it's not just so PvP, you'd think, Yeah,
PvP necessitates, like, an like a bigger population of people to draw from.
Oh, exactly. Yeah, and that is just not really quite happened this cycle yet.
I think we also have to, like, think about what is the thesis behind new coins launching. I think it's very clear. Like, if you're looking at the other side of the risk curve and you have RWAs, you have treasuries, like, the technology makes it so that the value proposition is super valuable. It's super easy for institutions to understand. It's going to cut their costs, and they're going to be able to provide the same quality of service. boom, on board, all the assets on chain. But when it comes to like a net new class of assets, I can understand why Pump Fund is going in this social fi category, why 𝘰𝘯𝘓 is starting to pop off, because it opens up a new asset universe. Every creator, every piece of content, tokenize it all. As far as what the value proposition is for other new token asset classes, I don't know. I'd have to get really creative and really think about what new asset classes are necessary to create.
Yeah, I hear you. Well, we'll see how this plays out, and it should be interesting. Up next, we've got 𝘗𝘂𝘐𝘗𝘦 from SQD. We're gonna talk about the AI kind of meta, the crypto AI space. And actually, I think I just saw him reply to one of my tweets about Yeezy. Good place to start. We'll get his take on that. Let's get 𝘗𝘂𝘐𝘗𝘦 up in the back and in, and we'll start with their newer product around this kind of, I think it's called like SQDN AI. But yeah, we'll have 𝘗𝘂𝘐𝘗𝘦 explain what he saw on the Yeezy launch to start off. So let's bring 𝘗𝘂𝘐𝘗𝘦 up, and yeah, man, welcome to the stream.
Hi, Andy. Hi, everyone. Nice. Thanks for having me. Nice meeting you all. So yeah, I heard about Yeezy.
Yeah, I saw your tweet. I saw you respond to one of the tweets, or I think my thread, and you were like, "We saw this on our AI tool, early." Like, so, walk us through, what did you see? What is this tool? What was the outcome that you found from this launch?
Yeah, actually, it's like pretty indicative and pretty validating to our mission. So what is like the tool? The tool is called 𝘗𝘂𝘵𝗔. So it's a project that I launched in November, was the whole like big mission to democratize the trenches. Basically, right now, more than 90% of the traders lose their deposit within the first like 2 weeks. Simply because they don't have access to the right data, right decision, right information. And this like Yeezy coin is essentially like an epitome of that. I just reposted some stats that basically 15,000 people have lost like $50 or so. There are like hundreds that have lost 1,000 and more. A few people lost 1 mil plus, and only a few accounts actually made money. So everything is in chain. You can track that. And at the same time, how do you actually like level up the field, right? So you actually need a tool that is super quick and that can also analyze the information that right now is only available for pro traders. So, and at SQD, we have the biggest data lake with on-chain data, and like it was a natural extension to basically like build a retail product. So, and this is where we are right now, an AI-powered bot, which detects early movements, early launches, both for EVM and Solana, by analyzing transfers, flows, and like smart money moves. And actually, it detected Yeezy launch today at around 4 a.m. my time. I was sleeping and just like came to this like private chat with our token holders, and like, holy shit, this thing actually identified the right one, and it's like printing. I believe that it was after the tweet, but shortly after. Actually, it detected it at around 200 M because it identified one of the high-performing wallets buying in, and this is like one of the like key signals. So in the future, we actually want to add like a complete auto trading feature, in the sense that the bot would have been able to trade for you the signal, right? Because right now, even if you see the signal, you cannot really like react that fast to validate in this, but still it was like super early. So if you kind of like so first of all, it's like the right token, so it's not a scam token. And the second is you actually get in very earlier than other like crypto Twitter degens even know about this, right? So the kind of TLDR here is that if you just rely on your manual skills, especially if you're just like new to crypto, you basically have zero chance of not losing money. You're like playing against sharks, and in order to actually survive, in order to like level up this field, we really need like best-in-class data and best-in-class tools for that. And this is exactly like what we're building. With SQD providing the data and SQD Degen like being an AI-powered interface for that.
Awesome. Yeah, the SQD AI insights, are you primarily looking at blockchain data? I take it as the most primary layer. Are you also taking into account, or maybe you have this on the roadmap, to start looking at sentiment analysis, start to validate some sources of data aside from on-chain metrics, but you're looking maybe at Twitter, you're looking at, maybe there's other sources where you can start to pull this data from?
Yeah, absolutely. This is in our roadmap, but not our focus at the moment, because we mainly try to catch early launches and try to give a chance for small people who have only, say, $100 in their deposits to catch this like 5x, 100x. And normally, if you get into a token which is only 15 minutes old, then there no real information on Twitter, or like actually even many services and DEX aggregators don't even have this token indexed. So we actually rely on our like kind of own infrared like to snipe and like to send the transactions, but it's like a different story. At the same time, down the road, we definitely want to expand our pool of strategies like in data analysis, and that would in particular include sentiment analysis. And I'm also like very bullish on the capabilities of SQD network to be able to serve vector data in the future. So this is something that is like also in our roadmap, but at the moment, our like edge in our data mode here is like being able to have like very high resolution of the on-chain data, in particular like who buys what, analyze like wallet clusters, and like basically have like all the power of machine learning at our hands, together with like the best-in-class data there.
What do you think is the future of the trenches? Like we were just talking with another launchpad provider. He's talking. It was Fish from King of the Mill talking about meme coin fatigue, and how there's really a new game. Like the meme coin trenches, they need a new game, right? Where do you think this goes? How do you think the trenches survive long term?
I think that it's basically like casino and greed, which is kind of powers this and fuels. It's kind of like a little bit of a dark energy, but this is what makes it like so appealing. Because if you have like $100, the DeFi space is not really that attractive to you, because like what can you do with that, right? You can farm. Maybe you can get like, I don't know, like even 40% APY, but then it doesn't really move the needle for you, right? You really want to get this like very hard dopamine hit, like of spotting something very early and like holding it like to 10x and ideally to 100x. I think that was one of the main catalysts during the ICO era, right? And I personally was kind of attracted to crypto back then, simply because I was like, what the hell is going there? I really need to figure that out, because you just like feel that something is going on when people just like immediately get that much so quickly, and then people are just attracted to that. At the same time, there are so many like bad actors who just outright scam people sometimes, right? Or like rug, and for that, the best kind of remedy is like to have a more kind of information, like reduce the information asymmetry, reduce kind of the entry barrier. And I believe that LLMs, like in general AI, is a perfect tool to democratize the knowledge. So basically you can just like chat and like set the vibe. Okay, like say, okay, I want to get Degen, but just like give me something that at least has low probability of rug, or like at least like exit when you feel it's right. So basically like do the heavy lifting for me, because even if you're liking on Solana and you get in like some decent token with very, very high probability, it will just like go down and you're going to be ragged anyway. So
yeah. When you're looking at SQD's kind of product value, as you guys expand to more and more chains and protocols and provide them with indexing and different types of data services, when you're looking at your current suite, is there more tools, or is there more interest and excitement around some of the more like AI agent capabilities? Excuse me. What is the state of SQD's agent capabilities, collaborations? Who are you working with? Why do people want to use agents? Where are you seeing any sort of demand? Like, basically what I'm trying to understand is why and where is this kind of crypto AI intersection actually happening right now? We get a lot of buzz about it, but like from your lens in the developer's seat, where are you seeing real traction and with which projects?
Yeah, great question. So I think it's safe to say that the initial hype of AI x crypto is kind of waning, and I think the main reason was that a lot of what is called AI agents were really sort of GPT wrappers, and there was not that much substance behind it, simply because if you just feed LLM with some information that trades a pure LLM does actually like suck really much. At the same time, in order to build something meaningful that outperforms even like basic benchmarks, you really need to have kind of serious models, and in general, old school machine learning performs better. When it comes to like our thinking at SQD, we see AI and like in particular AI agents more of a tool rather than a means in the end. And at the same time, we think that in general on the infra side, the dynamic is similar to what we have, for example, on L1s and chains. So there is like a long-term kind of base infrastructure. At the same time, there are applications that are built on top, and everything that is closer to the user and to the end consumer actually captures more value short term, but long term, the base layer becomes the mode. So this is what happened on Ethereum, where like DeFi protocols and smart contracts captured a lot more, I would say, like fee and value. But in long term, we see that like Ethereum is like outgrowing and outperforming this. So we essentially like built an ecosystem of like data and like data critical applications with underlying infrastructure powering them.
Yeah, that the AI data that you're talking about, like when you think about the evolution of the space, right? And you're thinking about, okay, we kind of have like this balanced approach. We're coming at it from the right curve, the high risk. This is the meme coin trench aspect, and this is kind of the super degen route. And then you see all these institutional traditional financial companies coming in, and you're thinking about this AI platform, right? Maybe this is a little bit more of a technical question about Squid rather than Squid degen. Do you think that these same data sources are applicable to both sides of the risk curve? How do you think you're going to, take and make the most of this AI data so that you can provide the best insights for your audience, your customers?
Yeah, great question. So the data is definitely very much customer specific. So at SQD, we have everything that happens on each blockchain, and then we have a tooling to essentially prepare that to different kind of applications and consumers, right? So for SQD degen, we have this degen side of the spectrum. We have another full institutional product called OpenStream, where we package RWA data information that is important for crypto native funds, for example, about like DeFi protocols, crypto yields, and so on, something that they can actually use directly in their strategies and like improve their performance, even for example on a 0.5%, but then having like say 100 million AUM would make it like them a huge difference, simply because they have just like a better or sharper tool here. And then of course there are everything in between. So people who are say like semi-pro traders, or like for example just applications building on top. So in general, I would say it's more like a complete cycle, but everything goes down to raw data that you can then distill and like transform in different formats.
Awesome. DZ, thanks so much for coming on, man. I think you help articulate kind of both sides of the risk curve here, the evolution of the meme coin trenches, and generally how these markets and degen, gambling, the casino are really starting to collide. We're seeing it all over the place. Meme coin trenches, AI is being used in both of these markets. So thank you so much for coming on, and congrats on all the success at Squid.
Thanks a lot, and thanks a lot for having me.
Right. See you, Dima. Cheers,
Absolutely.
brother.
See you next time.
Bye-bye.
Alrighty, sir.
Very cool. A lot of trenches conversation here today.
Yeah, man. Up next, we've got Ian from Ledger.
Oh, yeah.
Should be a good convo. Looking forward to it. And yeah, I think my cam had a little crap on me.
A little hiccup there. All good. We're gonna get Ian in here in just a moment. Should be a little bit more switching gears back to the other side of the risk curve. Stable coins, regulation, tokenization. Ian's seen it all from Ledger, obviously one of the leading operational security firms in the space. I've got a Ledger, I've also got a Trezor, but I think the Ledger is of the utmost security. So these guys touch it all, and I think we're going to hear a little bit more about stablecoin UX. These guys are helping to solve that, as well as staying at the tip of a lot of the things that are happening in the more regulated institutional space with regards to crypto. So Ian will be back here in just a moment, and then we'll get him on. Andy, what do you think about when we're doing this show? We kind of have both sides of the risk curve on, trenchers and launch pads. We're on a little bit later today now, or earlier today. Now we have the other side of the risk curve. Do you have a preference? How do you think about this balance?
Oh no, I was just thinking about it. I was thinking about how, like, if we get a bear market sometime in the next 3 to 6 months, and we're just going to go right back to in it for the tech. So I'm just enjoying the ability to talk about things that are not just pure tech, because as soon as it's time, it's going to go just right back to the tech. So yeah, I mean, I can enjoy both sides of the spectrum. You know what I mean?
Yeah, absolutely.
We got Ian in the back. We're going to get him up. Ian is the CXO at Ledger, and has a lot of experience with building a large company that secures a lot of the crypto users who prioritize self-custody. Also, I have a feeling, as a man with a lot of interesting network and talents and things based off the email threads that we were on. So excited to chat with him. Let's get him up on the screen here when we're ready, and we'll get it rolling. Ian, man,
welcome to the show.
Hey, thanks for having me.
Absolutely. Thanks for being here. We've had quite a few conversations with meme coin trenchers and launch pads today. None of them
not the usual show for us.
Not the usual show for us. And neither of them had the hair that you have. So you're a nice, refreshing guest today.
Hey man, thank you. I'm this old. I still have this hair, so I figure I got a lot of my friends don't. You know what I mean? I gotta keep it going.
Man, I got a feeling you found Bitcoin in like 2012. Am I right? Am I wrong?
Not quite. You know, I knew about Bitcoin 2009, 2010, but was like, so I looked at it through the lens of, I had done digital music, and I looked at it through the lens of watching, Nutella and anyone who had been in the peer-to-peer business get sued out of existence. And I said, okay, well, this is super interesting technology, but they can't kill the technology, but they can kill businesses that are around the technology, which is what they did with Gnutella and file sharing, right? You can't kill the ability to move one file from one computer to the other, but you can get rid of Kazaa, LimeWire, BearShare, et cetera. And that's what happened. So I looked at Bitcoin and I said, this threatens state sovereignty. So they will obviously come after this. But by around 2015, I was like, wait a minute, this is too big. You know, this is now the game theory's on, where if, let's say that one country bans it, another country's going to welcome it. It had gotten to that size. So that was when I started really paying attention. And then I joined Ledger in 2021. Really, it was during COVID where, you know, Tony Fadell and I, Tony was the pod father, created the iPod and co-invented the iPhone. And he and I spent a lot of time, our family spent a lot of time together during COVID. And we were looking at crypto at that time going, this is it. You know, this is, you know, the technology is here. A lot of these ideas that were sort of a promise, like smart contract, for example, that was like an idea 4 years ago is real today. And you've got 2 trillion of stimulus in the US, 1 trillion of stimulus in Europe. This is what this technology was built for. And that was when it was really go time. And I came to my friend Pascal, who was the CEO and still is at Ledger, and said, all right, what are we doing? And that's how I ended up joining the company in January of 21. Very
cool. There was a clip that I saw just today, and it speaks to something that you're talking about, where they actually, it was Tucker Carlson and another, it was a co-founder, and they said they thought Bitcoin was like created by the federal government, but it kind of got out of hand. And so we can, maybe there's something, and they also said that like Rockefellers, Rothschilds, they would never let their power go to this new world, this new era. But I'm curious, because I've heard this connection between digital music and Bitcoin. I think Andy and I were actually sitting in an airport. We were on our way to ETH Denver one year, and this guy started talking to us about it. And I was curious about the connection because this isn't the first time that I've heard it. So when you were kind of doing this digital music thing, where did Bitcoin come in? How did you kind of stumble upon it back 2009, 2010?
It was a guy in my office at the time. We were running a company called Topspin back then. So my background for your listeners, I studied computer science in the early 90s. I dropped out of grad school to go on tour with the Beastie Boys in 1995. We did Winamp in the late 90s, which when that team at Winamp is who also created Shoutcast and Gnutella. But then I did Yahoo Music for a bunch of years, making a long story short. And then we had this company called Topspin. And this guy, Parker Todd Brooks, worked for us at Topspin. And he was like, Bitcoin, you got to check this out. You got to check this out. And, you know, I'm just a nerd. So I'm like, all right, well, what is it? You know, and I do the deep dive and try to get my head around it. So to me, it's more of I think it's more about the kind of people. I mean, digital music was the tip of the spear with the internet, I think, for a very specific reason. If you think about it, you go back to the 90s, like audio files are pretty small, like video files were just too big to deal with in those days. Digital music is a really simple database problem, you know, artist, album, track, genre, you know, like every like young coder loves music. You can listen to music while you code, you know. So I think that there's an old joke that like every college student has this idea for a company that has to do with either music or bars. You know what I mean? So there is some, I think it's just the tip of the spear because it's a kind of a nice entry point. And that's why music was really disrupted by Napster in 1999, 2000, where a lot of the, you know, internet disrupted a lot of other industries more around 2010. And that's why I think that digital art is a tip of the spear. And the reason is because it's just really simple. You think about value and exchanging value between two individuals. If we have to come up with a currency, getting enough people to buy into the value of that currency is like, that's a scale problem in a way. Whereas like, I make this thing, do you like it? Oh, I like it. Oh, cool. Want to trade it? Oh yeah, let's trade it. You literally need two people, right? You know, and that's why if you look in the world of digital art, sometimes you'll see an auction that goes for, you know, tons of money, but there were really only two bidders. Because if you think about it, you know, that's the way, even in the contemporary art world, it can be the case. There are famous examples of particular pieces going for huge amounts of money, but there were really only two bidders, right? And that to me is why digital art is the tip of the spear, because a market can literally be one or two people. And whereas, you know, to get to a true ecosystem, it takes much more than that. So I think that, music was the tip of the spear for the internet for those reasons. And I think that, digital art holds a similar place in the world of digital value for that other very specific reason. No matter what you think about digital art, it's a physical fact or a fact of physics.
Just like one last thing on this, and then we'll get into some of the ledgers, some of the stable coins, some of the self-custody concepts. You've worked in music, in kind of early internet, some luxury brands, now crypto with Ledger. Is there any common thread that kind of ties your experience together in these ecosystems, whether it be the types of people, the work, the values, just any kind of experience that you can tie a thread through that applies to each of these industries, maybe in their early days?
Yeah, I mean, I think that there are a few things. The probably the number one thing that I would keep in mind is that storytelling plus time equals value. Right? And if you look at it, that doesn't matter if it's the Beatles, if it's Christian Dior, or if it's Bitcoin. Storytelling plus time equals value. And I think we really discount that. We look at, we try to look at, fundamentals, of course they have to be there, but the fundamentals are what creates the story. I mean, in the case of Bitcoin, we could easily bemoan the ETF and say, hey, that's not the spirit of Bitcoin. If not self-custody, why crypto? Like, there are a bunch of things that we could say, but the reality is, if it's not for what Bitcoin actually is and the story of Bitcoin and the ability to do self-custody, it doesn't have that value.
Yeah.
There's no value in the ETF if Bitcoin isn't Bitcoin.
Right.
And so I think that, to me, this is the thing that holds it all together. And I think the other thing that I'm really comfortable with that a lot of people aren't is just that storytelling has value. And that's what I have loved so much about Bitcoin and digital assets broadly, is it's really forced me to look at this thing that I never really thought about before. Like, what is value? How is it created? And I realized that I was already thinking about that, because why does a particular artist have an appeal to so many people and another one doesn't? And why are there these inefficiencies? Like, what I always wanted in music was just to be more efficient. I feel like we're all bombarded with music we don't really like all the time. And there's a bunch of music we would like that we're not getting. Super inefficient. I always wanted to fix that inefficiency. So then you become a student of how technology changes culture. But the reality is that value is a part of culture.
Yeah.
And so for me, I watched the digitization of all information. And that's really what the internet was, a revolution of information. And now, we're living through this once in humanity digitization of all value. And that's really what blockchain is, the digitization of all value. And so there's some sort of a thread in that. And then I really like, I was with LVMH for 5 years, and then I consulted with LVMH for 4 years after I left my full-time position there. And I just love that business. I love that, most people don't get it. Like, so many people would say, oh, why would anyone spend $50,000 on a watch? And I think that but the reality is that they do. If you live in denial of that fact, then you don't understand the way humans work, and there's a lot of value in understanding that. And, to be honest, people who understand why someone would spend $50,000 on a watch are very well placed to understand why someone would spend $250,000 on a CryptoPunk. They're very similar. Why does understanding why Basquiat has value is very related to why does a CryptoPunk have value? Because storytelling plus time equals value. Every year, more people know the story of Basquiat, and there is no more supply.
Yeah.
Storytelling plus time is value.
It's that simple.
This is similar to the Lindy effect, where the longer that something's around, the more likely it's going to be around in the future, because it starts to build that insulation around it. That's right.
But what's really interesting about that, Robbie, is that really applies to brands. Like, if you start to reposition things and think about brands, and if you realize that Bitcoin is a brand, the Beatles is a brand, Christian Dior is a brand. Christian Dior died a long time ago, and Christian Dior as a brand is more valuable today than ever. Louis Vuitton died a very, very long time ago, but Pharrell carries that torch and builds the storytelling and adds to that time. And if you and I started a brand today, then it's gonna take us 15 years. You know, there's no overnight success in brands.
Right.
You know, there's just it can't happen. It can only grow organically. I'm watching my friend Brees build this running clothes brand called Satisfy. And I'm watching him build it brick by brick, and it's the best lesson in brand building I've ever seen in my life. And I feel it. You know, I'm friendly with the really amazing person who's the CEO of Golden Goose, the shoe brand. And what's interesting about that brand is, you know, the first 15 or so years were organic growth. You know, slowish growth.
Mm-hmm.
Now the hockey stick growth was in the next 15 years. You know, and that makes perfect sense. It's the Lindy effect, as you said. It's like, you have to have, it's almost like in brand building, in culture, we can like point to it, because we can say, okay, Golden Goose had to be around long enough that Virgil Abloh could say, yo, that was my shit when I was in high school. You know what I mean? Like, you have to be around that long. And if you're not around that long, then you haven't built, to your point, any of that insulation, right? Yeah. And that's why last year I was going like, this year is Bitcoin's year. You know why? People be like, why? I say, because 15 years. That's it. It's just that
simple. Stand the test of time, and without time, it doesn't have it. It hasn't shown that it hasn't earned that.
Hasn't earned it. And think about 15 years of everyone trying to kill it from every angle, the technical angle, the security angle, the shit talking angle. Like, people try for 15 years to kill it, and Bitcoin's just still sitting there going, guess what?
Yeah. Well, I think that's a good segue to Ledger.
Yeah,
because Ledger
is a good segue.
Because it's a security, it's a brand that's built on trust and security, and it takes time to earn that trust. And so when you were looking at this, and you were kind of looking at your portfolio of work, music, luxury brands, kind of going from one thing to the next, and you heard about Bitcoin, what was it about Ledger's story that drew you in?
So I didn't get it when I first met Pascal in 2015. I was like, okay. I mean, by the way, Ledger started in 2014, right? So it was sort of like, okay, I guess, like, why aren't we just going to do this on our phones? You know what I mean? Like, our phones seem real powerful. So for me, one hurdle I had to get over was that question. Just technically speaking, why can't our phones and our computers do this? And that one, I'm technical enough that didn't take me very long. Once I spent some time with the founders of Ledger, there's a couple things here. One, it's based on the chip and pin technology, right? And the other is just the simple fact that phones and computers are built for performance, not for security. And they've got layers of technology in there. It's really like, if I gave you the task, I'm like, hey, I've got 1 billion in gold bars. Let's build a building to protect this. And you're like, okay, let me get into that. And you start planning it out. And then I come to you and I go, oh yeah, sorry, I forgot to mention, I'm going to put a shopping mall and a kindergarten and a nightclub in the building too. And you'd be like, please don't. Like, can we just focus on the gold bars? But that's literally what, and if you're keeping value on your phone, or even worse, in your browser, like, that's what you're up against, right? That's not what it was designed for. It was designed, it's a very powerful tool, but it was designed for something else, where Ledger was designed for this very specific thing. I think the other thing for me was just realizing that as this value grows, as it becomes less niche and becomes more something that everyone's doing, then the attack surface gets broader, not more, like, it doesn't become more hardened, it becomes less. And you have a device that your kids are playing Candy Crush on, and you're also going to try to protect your wealth on that. Like, that just seems absurd. But the real thing for me that made me kind of get Ledger was 2017 boom and bust, the ICO craze. Because during the ICO craze, I was just like, I don't know. Like, I'm looking at this, I'm like, this is .com madness. I've seen this before. I remember 1999 really well. I'm that old. And this is just total madness. This does not hold. And I was like, also, who knows? Like, I thought maybe it was Bitcoin and Ethereum, but I don't know. Like, you got Kodak coin and your mama coin and everything else.
Kanye coin, man.
Yeah,
coin now.
I don't know, you know. And then it all came crashing down, and I was like, oh my God, Ledger. Because what I remember from the late 90s was the same. It was a bloodbath. Everybody was going to kill everybody. Was it Yahoo, Excite, Lycos, Alta Vista, Google, You thought Netscape couldn't be killed, but Microsoft comes in with Internet Explorer. There's a book called World War 3.0. AOL, which is like, what? They buy Netscape. What? Like, you know, it was just, and then what I remember from that 99 era is that Cisco was just sitting there on the side going, we're good. Why? Because they have one question. Will there be more internet tomorrow or less internet tomorrow? We think more. Okay, we're going to be fine. They don't really care if it's Google or Alta Vista or somebody else. Cisco is just Cisco. So I called Pascal, my friend Pascal. I was like, Pascal, I think your company's going to be huge. He was like, okay, well, you finally get it after we've known each other for 3 years. You know, like, what? Why do you finally get it? I said, because you're Cisco. Like, I just watched 1,000 coins get created and 999 coins fail, and Ledger doesn't care. Ledger's like the honey badger, doesn't care. Ledger's like, will there be more internet value tomorrow or less? I think more. Okay, guess what? You're going to, if digital value, you must have self-custody, or else what are we doing? We're building another Visa, another PayPal? No. If not self-custody, why crypto? Well, if self-custody, then security. It's that simple. And so Ledger's the only company that's been around for 11 years saying exactly the same thing. We are maximalists about self-custody and security. We have standards of self-custody and security that we don't go below. Every cycle, people come in and they tell you why they need to compromise on security, why they need to compromise on self-custody. It's usually got onboarding the masses and their rationality. And it always blows up. And Ledger says, you know what? We're going to keep high standards of security and self-custody, and we're not going to go below them. And therefore, we'll be here tomorrow. Yeah. Because if not self-custody, why crypto? And if self-custody, then security. Period. And also coming out of luxury, I'm very happy to be that premium choice. 7.5 billion smartphones with some kind of a value management app on them, from PayPal and Venmo to Coinbase, Robinhood, Revolut, right? I'm very happy to be the one where, if you're serious about finance, if you're serious about security, privacy, self-custody, counterparty risk in the form of like not getting FTX'd, Ledger is your choice. 7.5 billion with 1 billion people with a password problem. How many of them have like good password hygiene? Yeah. Okay, not very many, but enough that 1Password is a great business, right? Same thing here. You're going to have 7.5 billion with value apps on their phone. How many of them are going to have good security, real privacy, no counterparty risk? Okay, it probably won't be 50%. I'm the first one to admit that, but it's still the right way to do it and a great business for Ledger. And that's like who we are and why we're here.
Ian, one last thing for you with regards to the shift towards how Ledger's been approaching the more kind of institutional, like let's just say the adopters of this cycle.
I don't know. We dropped.
It's not really like
Ian. I do have one more for you,
because
you kind of illustrate like this larger dichotomy that's
capital coming in.
And I wanted to talk a little bit about stablecoins. Maybe this is a good opportunity.
When you're looking at that is how do you pitch income these type of people self-custody?
Of internet value that's happening right now today. Stable coins from these institutional providers. I mean, the Treasury Secretary Bessent says this is $1 trillion industry. It's going to help the U.S. issue T-bills and treasuries. That is all happening through like custody, like custodians. They're using BitGo and Coinbase custody. And then on the other side, it's the convenience that you mentioned. Like, it's these guys that maybe they don't have good password hygiene and they're using it. And it's kind of, they want exposure to dollars. Maybe it's in the third world. And they don't have that luxury. They're not taking it seriously. It's just it's incrementally better than their own native currency. And so where does Ledger carve out the audience that you're talking about, its customer segment, between these institutions and then these these other countries' citizens that are using it to get exposure to dollars and not taking self-custody as seriously? Why should they?
Yeah, it's a great question. I mean, just to kind of acknowledge what you're saying. Like, we are at this crazy inflection point where you've got this like real merge of TradFi and crypto, right? Which is it's a great moment for all of us, I think. And I think this is where my internet history experience comes in handy, because I think there's both hope and caution if you look back at the internet history. Like, first of all, we still have TCP/IP, and we do have, a free and open internet in many places. Now, at the same time, there are a lot of things where it's converged around big players, right? The GAFA, and how many we used to have 1 billion email providers. That's an exaggeration, but you know what I mean? Like people used to use their like local ISP as their email provider, and now everybody's on Gmail, right? And so you do get these centralization points as well. So I think we could, we can look at that and expect some of the same things. But the reality is that there were many people who thought that the internet wasn't going to look like the internet as we have it today, with a lot of interoperability. They thought it was going to look like America Online or CompuServe. And I think that that's very much sort of like the CFI way of looking at things. But what we ended up with is an open internet, with open protocols that are interoperable, and they talk to each other. So again, I think that we will always like have these sort of scary points of centralization. And that's somewhat inevitable. I mean, if you look at like in the stablecoin space, what Circle announced last week by announcing their L1, you're like, wow, are we just kind of moving toward like a more balkanized world again? But also I think it's a bit naive to think that we're going to onboard, grandma to the, sorry for your loss world, right? There's going to have to be like flavors of this, which have guardrails, for the average population. And I think that there are, people building tools for that. Circle's one of them. Canton Network's another one. There are really interesting things happening in that space. Also, though, all of those, whether it is USDC or like a Canton Network or a private blockchain, privacy-centric blockchain, you still do have self-custody at the end of the day. Someone has custody. Even in the case of a custodian, the security of that custodian matters. And at Ledger, we have two sides to the business, a retail side of the business and an enterprise side of the business. And as a user, the security of the custody matters, whether that's in your hand or in the hands of the custodian. The amount of times that like Pascal tried to tell Sam Bankman-Fried that he should be using Ledger Enterprise, you know what I mean? Like, and Sam's like, oh, not my department. I got people on my team who worry about that. Well, we can talk about that now because FTX imploded, but we have that same conversation with exchanges that your users use every day. Your users should be asking, what is the security of the custody of those tokens on an enterprise side? Are they, and the Binance is on record saying they use Ledger Nanos, as their custody solution. Okay, well, what's the governance model around that? That's why we have Ledger Enterprises for governance. So my point is that if it's not self-custody, then it's not crypto to begin with. What we have, stable coins, is dollars running on crypto rails. There's going to be, and that also is going to lower the cost of building fintech. We don't need to use credit rails for digital cash anymore, which means that merchants don't need to pay 3% at the, in the US for those transaction fees. And so you do end up with just a different infrastructure layer and a different marketplace with different like forms of competition between the players. They're going to need to compete on different things. So I think at the end of the day, though, this is going to be very invisible for the customer. At the beginning, remember, the initial pitch for Spotify was it was a P2P network. Yeah. Is Spotify a P2P network today?
No.
I mean, and the answer really for me and you is who cares? Maybe. Yeah. I don't think it is either, but for the user, who cares? It works. Right. Same thing when I'm using a solution like Satispay to pay in Italy. Is that crypto underneath? I don't know. Who cares? Probably not, but who cares? Like what the merchant cares about is that they can get the money really cheaply and they can get it immediately and they don't need to pay 3% and they don't need to wait 30 days for settlement. Like that's what the merchant cares about. And what the consumer cares about is, do I have a good user experience? Am I getting a good product at a good price when I want it? Right. Yep. The rest of it is for us nerds. Yeah. And so I think, we do need to care about these things. And I think there are definitely some pitfalls that, collectively we want to avoid. But to be honest, the toothpaste out of the tube. And you can't put it back in. Like we've got stablecoin regulation in the US. You have competition around offering the best user experience around digital dollars. And that opens a whole new world globally. And this move from God to state to network that Balaji talks about, this is a big, big, big moment. And so, I think there's pitfalls, but I think overall, the ball rolls downhill from here, and it will. I think it will surprise us. I mean, for those of us who entered the internet because it was this, open, free software, free as in free speech, not free beer. Like that's where I come from. Like, Free Software Foundation roots. And, we're obviously disappointed with an internet that's owned by Google and Facebook. So, don't be naive is my lesson.
Yeah.
At the same time, the internet did change the world. No question. So, in ways that we never would have predicted. So I think that you can expect the same here. It's that thing where you always overestimate it in the short term and you underestimate it in the long term. I promise you that'll apply here.
Yeah, totally. Ian, thanks so much for coming on, man. It was an absolute pleasure. I think, this was one of the more fascinating conversations because it stretched all the way from, your early innings when you first heard about Bitcoin and blockchain as this record for transmitting digital music and any information digitally, all the way to the internet of value. And we're just, like you said, the ball's rolling downhill now, and this is just getting more.
Man, it's the most exciting thing I've ever been involved with. I love I love the mental calisthenics on this one. Bring me back anytime you want. I'll jump in anytime, and just have some fun with you guys.
Absolutely.
Appreciate you, Ian.
So much fun, Ian. See you next time.
See you.
All right, buddy. Be
See you,
easy.
brother.
Cheers, man. Yeah, man. That is a complete 180 from the Iris $10 million Series A raise, and then following up the Launchpad new token and kind of AI meta conversation. And we have another reverse Uno card coming with Sherpa up next. Sherpa is a trader, investor, the KOL of KOLs, one could say. I think Thread Guy would call him GCR, KOL GCR. And yeah, man, I mean, we got to figure out what's going on. We got to talk about Easy. We got to talk about Bitcoin. We got to talk about when the market's going to top. We got to understand his thesis for how he's playing this next Q4, what he's doing on the side of things. So,
and I think you had a great question about Nash equilibrium, and I'm curious to get Sherpa's take on that as well.
Yeah, I think that's a good place.
He's in
the
back. He's behind the scenes now. Let's get him up here.
And yeah, man, what a last couple of days with this, or last 24 hours with this Yeezy launch. I know Sherpa saw my my news breaking tweet. Breaking Yeezy 200 mil to $2 billion. Sherpa, I saw your post about it, man. You said you called it a lose-lose. Yeah, if it just kind of felt like the market brushed it off, like I've seen this before. It's not interesting, which is crazy, right? Compared to how Trump was basically just pumped, but it was a different environment then too.
Totally different environment, and then also like people kind of knew about the Yeezy coin before. People knew that he was going to like sell his Twitter account. Like this was kind of a known event, much different than Trump, and also Trump is just obviously way higher tier than Yeezy. And I think that people also just knew that. It's like probably the same teams behind Libra and like, the same type of like overall like, dynamics behind it. And like people like, fool me once, shame on me type of thing. But yeah, I was happy to see that like people didn't like the majority, like it wasn't as bad as Libra from what I saw. And I didn't think it was going to be either, just looking at the group chats last night when I was looking at it live.
Yeah, I mean, to me, it's kind of a zero already. Like, I don't think it's going to have another run to 10 billion or anything. I wouldn't be buying it. I don't know, though. I mean, I don't know what you guys think, but I don't think that it's I don't think it's got a 10 bill push in it, but it very well could. I mean, I don't know.
Unless there's some real online money, some new economy, like his claims really stack up to be true, which are pretty unlikely at this point.
No, I agree with you too, Andy. I don't think either. I mean, you need either like one of two things to happen. Either one, like all crypto native people just to full port like they did for Trump and just like sell everything and just buy that, and all that liquidity just goes into Kanye coin, or you need a lot of outside money to come in order to like, prop that price up. and I don't see either of those happening personally.
Yeah.
Sure, but do you think this is pretty accurate and consistent with where we are in the cycle? Like is this a top signal relative to some of the other things we're seeing, or is this kind of out of place? What do you think?
I don't think it's really a top signal. I think it's kind of I don't know. I think it's pretty much a non-event personally, like, because like it might have been a top signal if like you saw lots of money pile in there, but I mean, as I said, like, you know, as we already talked about, it's a pretty non-event. This is an event that we've all kind of known about, or we've like heard about for months now. It's like pretty known, and the fact that also that, you know, the market wisened up quite a bit. Like there wasn't like nearly as much damage from what I saw on Yeezy as there was Libra and some of the other big ones. You know, I don't personally think it's like a top event.
And so so as a kind of temp check on the market, is this indicative that like there's really not the fear greed index? We're actually not very greedy. The market's not very euphoric right now because we weren't automatically piling into this thing with fervor. Like it kind of shows us that the market isn't as overheated as we thought.
It also just feels like the timeline is like kind of bearish. Like everyone's trying to call the top. Like it's a weird dynamic.
I think it's a weird dynamic because there's only like 5 to 10 good altcoins that are like pumping it at any given time, and the majority of people like aren't hitting those trades unless you're very plugged into the market. You know, you're stuck in like, I don't know, like Tau or something, and like, you know, you're just like looking at that bag, just do nothing. Whereas some other coins, you know, are like pretty active, and you know, those people are pretty vocal. As for what Robbie said, like, you know, in terms of like the event of the Yeezy, you know, being a kind of temperature check where, you know, people aren't really aping into that. No, I don't really agree. I mean, I think that it's just that like Andy said, the environment is much different, you know, relative to January. On chain itself, like, you know, you really haven't seen too many like huge runners. I mean, there's a lot of seedlings to these coins lately, and that's just a like product of like how much extraction has happened over the last, like, you know, 6 to 8 months or what have you, where there's just not as much money on chain right now. I mean, will it come back? Probably. It always does in some way, shape, or form. But I mean, I just think that, like, you know, a lot of the money is just being stuck in either like boring coins like, you know, Ethereum or BNB or something, or these other random alts that just aren't moving, you know, kind of typical alts. Yeah. I mean, I've been following this guy, level 941. I don't know if you've seen him, like the pigeon guy. Yeah, I think I've seen some of his tweets before. Yeah. So he's been pushing on this idea of like the current environment being like you're in the later stages of a multi-table, no limit Texas Hold'em tournament where, you know, let's say you start with 10 tables, now you're down to 3 tables. You've obviously accumulated a nice stack. And he's saying his strategy for like basically from now until, you know, I would say just throughout the end of the year is like keep a lot of your stash basically safe. So risk off a bit. And then with the remaining stash that you have, he's just going full buying calls, buying memes, just full maximum out on the risk curve as a way to maximize your EV this late in the cycle. I think there's 2 schools of thought right now, which is one is that this is going to end like sooner than we think. Like we get one more really good run here across the board, maybe a pullback, one more run, maybe over the next 30 to 60 days. And it's over before people, you know, earlier than people think, October, let's say. And then there's another school of thought that is like, well, no, this is just going to kind of not have a parabolic blow off. This is going to basically go higher for longer. And you know, it's a different cycle now, institutions, DATs, et cetera. So like, I'm just trying to think about how to think about the current framework of portfolio management, you know, in the late cycle. Like, you know, from your experience, like what are you doing right now, late, you know, if you consider it late cycle, you know, is there a certain strategy that you have? Like, how do you think about where we are versus how you're managing your capital? I mean, personally, I think ever since the ETFs, I'm like of the opinion that there's no longer like these insane runs that we had in 2017 and 2021, where it's like pretty much parabolic up only for 2 years, and then it's just like down only for a year, and then chop for a year, and then the cycle just continues. I think that most of that has just been like kind of not necessarily invalidated, but you can also see the price action in the charts where Bitcoin is just kind of consolidated from the majority of 2024, big leg up, and then it moves back down a little bit, then another leg up later. I'm of the opinion that these days, for at least the foreseeable future, we're just going to see these kind of mini cycles where you have like anywhere from 1 to 2 months, maybe 1 to 3 months of good price action, good kind of environment for trading, followed by like anywhere from like 1 to 4 months of chop, depending on the context. So we saw that back in kind of like December ish in 2024, going into the new year of January 25. We saw like that was kind of like the top, so to speak, followed by several months of just downtrend and chop. We didn't really have much fun, for the most part. I mean, sure, there were some pockets here or there, like, maybe like a month or two of nice moves, but as a whole, like, we haven't really seen, the bottom was actually found in like kind of May. So that's kind of like what I expect here. Like, these overall like boom cycles are going to be shorter, but alternatively, the bust cycles as well are also going to be shorter. So like, I generally agree that like, we are at kind of like the tail end of this current run. I mean, it kind of moved like pretty strongly since May, and we had like a little bit chop in between there. It wouldn't surprise me to see like, a little bit more fun, for another few weeks, and then like maybe like a long cooling period for another few months until like maybe like late December, another, big move up, and then we just rinse, wash, repeat, a few months on, like a few months off, basically,
Yeah.
but more months off, generally speaking.
Yeah.
And that's kind of on the time dimension, right? Things are a
Yeah.
little bit shorter. When you're thinking about the price dimension, does that mean that these pullbacks might be less severe because they're happening more frequently?
So I wouldn't necessarily say that. I mean, like, there is something to be said about like so much crazy priced like altcoin dilution. There's like one of my favorite charts is the Pepe chart, where if you look at it, Pepe went on strong runs all throughout 2024, where it went up like 10x, then it went down 60%. Went up another 3 or 4x from there, down another 60%. Went up another 3 or 4x from there, then down like 80% back. In kind of that January to December period. Went up a few X from there. So like, what I'm trying to say is that I don't really see there being situations where like, an altcoin does like, 30x like it did in 2021 or 10, 15x. Insane numbers, and then like it dies like negative 95%, and then it chops for like another year after that. Like those are extreme cycles. And like, to be clear, you can have a view on one altcoin, and a different altcoin is going to be totally different. Like, there's several other shit coins that like probably will never like ever move again, and that's just the nature of the shitcoin market, where a lot of these coins just like won't ever really pump. Just there's no organic demand. They're just too old, bad tech, zombie companies in a lot of ways. Yeah. So like, one size does not fit all.
So to be clear, you don't think we've topped. There's probably some more upside left before a shorter but still aggressive period of downturn in some capacity. You're going to have to start to think about these markets as like risk on versus risk off periods within larger cycles, which is obviously up and to the right if you really zoom out. But like from a trader perspective, you still obviously want to be capturing the meat of the move of these risk on periods, and then really trying to avoid a lot of the risk off periods. And I mean, you got to pick your tokens far more strategically than before, right? I mean, we've seen this already.
Yeah, I mean, I generally believe that we are like closer to the end than the beginning for sure. Like, we're not like early innings by
but it's not topped already. Is
I mean, it could be. I mean, I don't believe so personally. I still think there's going to be like some treasury companies coming onto the market. You know, in September we have rate cuts coming. That's probably already priced in to some degree. I'm not like some sort of macro expert, but like basically what I'm trying to say is that there's still some good coins that will like continue to perform well, but the rest of the market will perpetually just be down only with some small blips here and there. That's just the nature of crypto shit coins.
You doing any like angel deals these days, or just fully on the liquid side?
I'm mostly passing on everything. I don't know. I'm like,
yeah, same here.
Yeah, it's just kind of hard, honestly, these days. Like, yeah, like
we kind of had like the heyday in 23, 22. I mean, really, it was like 2020 was the heyday for that.
Yeah, venture investing has definitely gotten like much more, I guess, efficient in some ways.
Yeah. When it comes to kind of picking out, I guess picking winners is the best way to describe it. Not to put you on the spot and like pick any in particular, but in general, like, you know, you said most of these are going to be down to the right with some blips. Are you trying to capture the ones? I guess this is a two-part question. Are you trying to get those blips, or are you trying to pick out the ones that aren't down and to the right and have, you know, some sustainable business model? Generally, when you're kind of sifting through, you know, the thousands of altcoins, what are you looking for?
I generally look for ones that have some sort of attention and don't look like zombies. I mean, everybody has a different trading strategy. Some people like, there's a lot of different strategies you can use. Some friends like to like buy these like totally dead ass coins that will have like these crazy liquid spikes. Like, you know, they're super liquid. Like you have to like spend a long time accumulating them. And they'll just like buy these shitters and then just like sit on them and then like wait for it to spike like 5x randomly from some like rogue market maker, and then, you know, everyone dump, like he'll just like set his limits. Like
there's so many dead coins on centralized exchanges.
Tons of them. Yeah, I mean, like, the majority of them are. Like if you look at the charts of all of them. But to answer your question, no, I'm generally looking at coins that like actually have some life in them, have some volume, have some actual real buying. And you're right. I mean, at the end of the day, like, you know, as I said from the like beginning of this kind of little podcast, I guess, in the sense that there's only like 5 or 10 real coins that you can buy at any given time. You know, that's just the nature of this current market environment.
Sure, but you got any questions for us? I feel like it's just been all us asking it. This takes me back to the old pod that we run.
No, not really. I mean, I guess what do you guys seeing that's like interesting in terms of themes? You guys interview like a lot of different guys from all sectors of crypto. Like, what are people like kind of most like excited about in terms of like the newer themes that we're seeing, like in terms of like where the money's going?
I mean, dude, I think people are really stoked on Hyper EVM, actually, airdrop farming it, and the new protocols there. But man, it's honestly the hardest question to answer, because I do feel like a lot of the interest in the narrative, and I put out a tweet about this, is like this year we've seen so much less narratives or like metas happen. Like in 2024, it was like there was like L2s, it was like modular L2s, then there was like other infra narratives, then it was like this crypto AI thing, and then there was you know, now it's just been like DATs or who's buying these large amounts of, like, there's been like this revenue narrative, I suppose, but like it's kind of interesting, because if you ask people like what they're interested in, it's more of like what's hot, and I don't know, there hasn't been like a really hot, like, I mean, I guess we kind of like internet capital markets for a couple weeks there. But dude, it's been a weird year in that we haven't had like the same rotational metas that we're used to, that like you get stoked on something for like a couple months, it passes, then there's something else cool. It's kind of just been like everybody watching how much Sailor is going to be buying. And then now it's like these DATCOs. It just, I don't know. It feels like the air has been sucked out of the excitement for like the real coins, if you will, due to like VC stuff, due to just like their price action. I don't know. Yeah, it's a tough question as far as like what's exciting. But I think like people have came on and talked about Hyperliquid, Hyper EVM, and like they've been pretty stoked on it.
I think it's the suits that are excited. Like that's where all the mania is. And I think
the tokenization stuff.
Tokenization, RWAs, even the revenue meta appeals to like someone who's going to try to value a crypto company by some traditional cash flow analysis model. that makes sense to them. I think what you're saying, like, that's why it feels like we're late cycle, because there's no nuance anymore. When we're deep cycle, we're in it for the tech. Like we see, oh, this is something kind of cool, something kind of new. And you kind of have these like sector things that tend to outperform and do well for a week, 2 weeks, 3 weeks. And then that narrative kind of moves on as there's some fundamental shift.
Yeah.
But it feels like all of that's been blended together. You can't really, there's so many things. The market moves so fast paced. Now it's just the biggest number.
It also just
captures
seems like the
all the
market,
attention.
like everyone's zoomed in more. Sherpa, I feel like everyone's so like, it wasn't like, I know that you're a trader and you trade on different time frames than like, you know, what we would probably do, but it does just feel like everyone's looking at the charts like a lot more. Maybe I'm just projecting what I'm doing, but it just feels like eyes are on the charts a lot.
Everyone stopped dreaming, and everybody now just believes or sees crypto for what it is.
Which it's a weird setup, man. It's a weird setup. Dude, so what do you think about the SOL underperformance for the last couple months? Do you think that's going to turn around? I know that these DATs are coming. I'm tweeting about them, or at least hearing about them. You know, is that thing, you know, do you think it's going to turn around? Yeah.
I think the rotation makes sense. I mean, back in the day, the easiest rotation was always Bitcoin to ETH and ETH to Bitcoin. You know, like you didn't really even have to trade anything else. You could have just held Bitcoin for most of the year, and then you swap it out for ETH at the end of the year, and then like, you know, you swap it back to Bitcoin, and like that was a good way to like accumulate more Bitcoin. At least that's what I used to do back, you know, in 2017, 2018, whatever. But I would say that like SOL, I mean, it really depends on where your view is in terms of like, you know, overall macro top or market top. Like, you know, if you strongly believe that like, you know, we're pretty much topped, and, you know, I'm not saying we're not, like, you know, there's definitely some arguments for that. But, you know, there is still going to be a lot more money coming onto the market in September, in my opinion. There's more, we haven't really found like a sailor for SOL, so to speak.
Yeah.
ETH kind of has one now, but like, I don't know. I think SOL should probably catch up. The hard part is the timing of it. You know, we don't really know how to time this type of trade, and yeah, it's a tough call too, because like, you know, if Bitcoin keeps like grinding down, then I don't know if it really matters, because like I think it's just going to pull everything down, regardless of like, you know, lots of buying and what have you thereafter from other vehicles or what have you. I still think that, you know, if Bitcoin goes down to like, you know, 100K or sub 100K, then like, you know, these other,
we're screwed.
yeah, won't be nice.
Yeah. Last thing for you, Sherps. You think these DATs are going to end poorly? I put out a tweet saying that they're going to mark the low of the next bear.
I honestly don't know how it's going to end. I mean, in theory, like it probably should blow up somehow, but I mean,
it is complicated.
There's a lot of mechanics behind it, like that I actually don't really understand, like, well enough. So I mean, like from a theoretical standpoint, it does seem like, yeah, like this is not very sustainable, like given some of this stuff. But I don't know, maybe it'll go longer than we think. I don't know.
Yeah. Sure, bro. Thanks for your time, man. We'll let you go, and keep it up, man. I'll see you in the trenches.
All right. Yeah. Happy to come on anytime too. It was fun.
Thanks, Sherps.
Cheers, brother.
All right, brother. All right, Rob. Good stream, man. Fun sesh. A lot of different types of convos, that's for sure. I'm ready for some breakfast.
Oh, there you go. I could sit here and talk markets for another hour. I'll let you go get breakfast.
You talk to yourself, man. Good fun stream. Thanks to the producers. Thanks to the crew. The last one of the week for us. And we'll see you guys next week. See you guys. Thank you.